Good afternoon, everyone. This is Eric Dumbach here at The Coach's Coach, and really great to have everybody on the call today. As you probably know, we're in the middle of our expert interview series here this week called The Top Trends Impacting the Business Coaching Industry in 2012 and What You Should Do About Them. We've had interviews with Ben Croft and Taki Moore and Paul Avens and just others, and it's just been a great week. And have with me on the call today Darren Shirlaw from Shirlaws Business Coaching. And Darren, thank you for being here today.
Oh, pleasure, and thank you for the invite.
Yeah, this is great. Listen, we're going to roll into these questions here, Darren, in just a moment. I see people are still logging on. So just before we kind of get into the formal questions here, I guess just tell me a little bit, how your year was. Kind of give me 2011 in review, just to connect a little bit with your world.
Hasn't it been an amazing year? I've been talking to a lot of our clients about the recession and how that's been panning along for people, and we had about 100 of our clients in a conference in London last week, and most of them are pretty upbeat, which is good. It's exciting.
That is good news. There's so much negative stuff these days. It's just good to hear that there's some good attitudes and so forth. We've had a good year too. This has actually been our strongest year. Every year's been getting better and better, but this has been our best year easily for the last 5 years or so. So we're feeling really optimistic about the coming year as well.
Yep.
So good to hear. Congratulations to you and all of your clients. And so let's get into it. I guess just to make sure that people have a sense of who you are, I guess tell us a little bit, Darren, about your career leading up to, business coaching. I know you've got a really amazing career in business coaching and in that industry, but you had a career prior to that. Just bring us up to speed on that for those who don't know you.
Well, I had probably an interesting career compared to a lot of people joining the coaching sector, in that I come from the fund management game, and in that sector I was managing an equity portfolio, and all the way up until I was about 32 years of age, I did that sort of stuff. As I described, made my money in that sector, and then one day, while reviewing the consulting game and having a look at trying to buy a company in that space, I bumped into coaching. Knew absolutely nothing about it. Used to largely sit at a desk most of the day and manage billions and billions of pounds of money, and I just bumped into it. So my career is really different in that it was all about managing lots of money and buying companies and stocks and portfolios and the like. Yeah,
that's an amazing background. I'll tell you, one of the things you kind of got on our radar, you personally, and then Shirlaws Business Coaching got on our radar, a couple years ago, and the first thing that impressed us was the diligence that you bring to the business coaching industry when it comes to money. It was just clear to us that you had a good background in managing money and evaluating companies based on their real value, and as a saleable asset, and that makes a lot of sense given your background. So I guess you switched over to the business coaching / consulting game in your early 30s by the sounds of it, yeah?
Yeah, I was only 32.
That's a great time, and I didn't realize that. I actually got into the business coaching space when I was the tender age of 31 myself.
Wow, yeah.
So tell us a little bit about the journey since then. What's it been like switching from fund management into business coaching, and what was the relationship between the two careers? How has it helped you?
Well, it's been an amazing ride. A lot of people say, wow, you couldn't have come from something more different, and I often say to people, what's your core? And to me, mine was mathematics. And to switch into coaching, which is, in lots of ways couldn't be further away from mathematics. It's been an interesting switch. But I looked at, as I was saying, I looked at that consulting game and then bumped into coaching. And I looked at coaching as a sector in 1994. And back then, the industry was well under 100 million in size. I went off and researched it. I actually I interviewed 700 coaching businesses back then to try and find the business model and what was right with it and what was wrong with it and whether the industry would or wouldn't grow. And I ended up running it all through my financial models and decided that the industry sector was definitely going to become, a bill plus industry one day. And then I looked at trying to buy. I then, once I got completely sold on the sector, I then went off looking for a company to buy to put into my portfolio, and I couldn't find one that I would buy. So in the end, I went, "Oh, this is one of those industries that's going to run." So I got out of the fund management game and set up my own coaching practice. And it was really the interviews of those 700 coaching companies that really gave me the answer to, how to set up one of these things, and as you said, with the financial models and all that sort of stuff behind it. And so we set that up in 1998. It took me the best part of 4 years to do all of that research. And we kicked off in 1998. So I've been going 12, 13 years or something now.
So 700 coaching businesses you interviewed looking for a viable model. Couldn't find any. Decided to build your own, which is amazing. Boy, 700.
Yeah.
So were these individual practitioners? Were they franchises? Were they licenses? I mean, what kind of businesses were you interviewing?
Well, you got to remember 1994 was very different to the industry today. So I found the 5 biggest companies in the world in 1994, and all 5 of them were franchised. Only one of them lives to this day. The other 4 all fell over. And the rest of it was, it was just heartland, one-man, two-man practices back then. I ran all of the stats on them. And they're really interesting stuff, which hasn't a lot changed. Is the business models of most coaching firms back then spent a third of their time trying to find clients. They spent about a third of their time designing something to take back to the client, and we're only spending a third of their time in front of the client. And so most people weren't earning, a great deal of money. The average earn of a coach way back then was under 30 grand across the 700. I only found one person who was earning more than 250 grand a year back then. And so I just ran all the numbers, all the stats, and worked it out from there.
That's such a great story. So again, I'm not sure that a lot of people on our list, people on our call today, are going to know much about Shirlaws business coaching, the firm that you built, and obviously this call isn't necessarily focused on that. But tell us, just the fundamentals of how you're set up, just so we have that understanding as we move forward in our conversation today.
Well, I guess the first thing you should know is that I don't just run Shirlaws. I have today we have equity in 29 different businesses now around the world. Shirlaws just being one of them. Shirlaws is the one that we started with, so it's the brand that people sort of associate me with, I guess. But we've got equity in other coaching businesses, and we've got equity outside of coaching businesses. Shirlaws is originally designed to predominantly be a business coaching brand. It was designed to go predominantly into the what I classify as the mid-cap sector. It was designed to be high-end quality, charge more than everybody else type product. And then today it's physically located in 11 countries around the world. We have about 600 and something odd clients on our books that spend in US dollar terms anywhere between 50 grand and a couple of million a year.
Yeah, and then you've got quite a few coaches around the world too, don't you?
There's about 100 coaches on the books. And recruiting. We're in the middle of a recruiting mode at the moment. But again, those 100 are, some of them are what we would classify as the partner level people that go out and see the clients, and some of those are the support people that punch out a lot of the work.
Yeah, yeah.
Our practice isn't franchised, and so we look more like a professional services firm than anything else.
Yep.
So if you walked into an accounting firm, law firm, large consultancy firm, or us, it all sort of is structured that way.
Yeah.
So we operate in teams with the classic partner, senior, junior, admin person on board. So and legally we're structured as a license, but we do that to attract the high-end people who want that sort of benefit of those tax structures and that sort of stuff.
Sure. Well, that's a helpful background and a helpful paradigm in terms of understanding how you're structured.
Yeah.
So you've been in the game a long time, making a very big impact. A lot of coaches around the world, servicing a really good clientele and banking a lot of revenue. So it's good. It's good.
Yep.
What have been a couple of your greatest accomplishments as you think about your business coaching career? And then we're gonna switch into talking about where things are headed in 2012, and I'm really excited. But yeah, a couple of your biggest accomplishments.
When I've spoken at industry events and stuff, what I always highlight is that coaches generally across the whole industry, I think our industry is a fantastic industry for making impact in the world, and I generally classify accomplishments in one or two categories. One is that cultural accomplishment, and it's most coaches you talk to, genuinely change people's lives. They're out there having a major impact on people, and our 100 people in Shirlaws would be no different. If you get what I love about our business internally is every time you read an email of a coach writing out saying, look what's just happened to this client, 99.5% of those emails is always associated with changing somebody's life for the better. That's what our industry does, doesn't it?
Yeah.
And then the rest of it is of the accomplishments that people achieve are all then the commercial accomplishments. I stood on stage a couple of Saturdays ago in front of about 400, 500 entrepreneurs, and I said to them, when I've interviewed the small business owner over the years, they've always said that there's three things that they really want to achieve in the world themselves. One of those is financial, so they, the average business person wants to earn more money or get paid out a lot more money. But the other two are cultural, and one of those is, they don't ever want to go and work for anyone else ever again, and they want to, live their own destiny, etc., etc. And the other one is they all got into business themselves because they want a lot more time with the family and, that lifestyle balance stuff. And, I said to 400 people in a room, I said, so how many of you are achieving all three? and you get the occasional hand go up, but 380 hands didn't go up. And I kind of go, well, when people ask me what are the accomplishments a business coach achieves, it's, they fit into those three categories, don't they?
Yeah.
And I guess the background from which we come from, the story we always tell is the story of me going out. In my very first client was what we describe as two little old ladies running a business, and it was in the conference management sector. And they'd just been offered 900 grand, by someone to buy out their business and retire. And their accountant was a mate of mine and referred them to me, and they said, could you have a look at our business for me and tell me whether you think it's worth 900 grand or whether it's worth more. And I said to the ladies, look, I think we could sell it for more than this, as long as you're happy to work for another 12 months.
Yeah.
And if so, I think we can get you more than 900 grand, and then with that, it'll, you'll get a much better retirement, etc., etc. Well, off we went for the next 12 months, and I ended up selling their business for 11.2 million. And I go, what are the accomplishments that you achieve? Well, that extra 10 million, that's kind of changed their whole life, hasn't it? And I think that's what coaches do. I think we you know, in a whole bunch of different ways, we give people more financial freedom, but we also, with all the coaching skills that we have, we uncover and unpick a lot of stuff that's stressing people out and all that sort of stuff in the world, and we fix those things. The largest deal that we've been involved with at the corporate end is the sale of O2 to Telefonica in Europe. And to date, it's the largest cash sale of a business in Europe's history.
Wow.
And you know, I coached the CEO of O2 for a couple of years, and we took it through to sale. And we've done a few big ones like that. You know, the sale of Winterthur at AXA for $5 billion and that sort of stuff. We've done those. But you know, of 600 odd clients on our books, there's you know, 20 or 30 corporates, and the other 600 are all those mid-cap, mid-tier type businesses, and they're the ones we love dealing with.
Well, this is good, really impressive background, and I have enjoyed the videos and the things that I've watched that you've recorded, where you just talk about your philosophy for valuing and growing value in businesses, and it's just excellent.
Yeah.
So let's talk a little about 2012.
Yeah.
And as prelude to that, let's just talk about even the last year or two. Now, you've been a student of the industry for a decade, as I have, and what are you seeing in the last year or two about our industry, the business coaching industry? How is it changing?
There's two things I could direct people to. One is over the last 4 years, I've been writing articles on the recession and all that sort of stuff, and it's a major impact on industries, including our own. And a lot of people aren't taking the impact of the recession on the industries. They're not looking at that closely enough. And I've written some 40-odd articles now, which we put into an ebook. So if people want to, they can jump on the website and download that ebook.
Sure.
And
what website would that be, Dan?
The Shirlawsonline.com.
Shirlawsonline.com. Thank you.
Yeah, and there's two ebooks on there. There's one which is the book on more money, more time, less stress, which is more the product stuff we give to clients. But the one I direct your audience to is the one on the economy.
Yeah.
And you know, it's a great read in terms of understanding where we're up to with the recession. Because effectively, the quick background to that is in February 2007, I pulled all of our clients in globally, flew them to Brussels, and I sat them down in a room and I said, we're about to go into a big global meltdown. And I've been guiding them all the way through the recession and explaining to them, the path that the recession would follow and all that sort of stuff. And, that's where we had 100 odd people in London last week. We had another 100 up in Scotland the week before, all clients, and they're just saying, well, what do we do next? When's next? How is it affecting my industry, et cetera, et cetera. So while people tend to be industry focused and saying, where are we up to, or where's the industry up to? I sort of been directing people and saying, well, get your head around where the economy is up to. And that'll help you understand how to respond with the industry.
Yeah.
There's the first thing. And the big thing I've been sort of explaining to people is that this recession is similar to the 1974-5 recession, similar to the 37-38 recession, which is effectively that it's a W-shaped recession, and which means we're in a big flat at the moment. And the only way to really create growth in an industry sector across a flat is you have to do some pretty radical and some different things. And is our industry doing enough that's radical or different at the moment? The answer is no. And so I'm sort of prompting the industry to try and catch up with where the economy's up to, and it's now time to capture market share against the consulting firms and the training companies and this sort of stuff. But people really have to take a leap forward with that one to get that. And the second thing to note is the coaching industry itself is going through its own life cycle. And what I referenced there is I was asked to talk at an industry association convention in let me pick the year. I think it was 2001. And at the time, I stood on stage and I said, there's about 400 people in a room or something, and I stood on stage and I said, if you look behind me, there are about 10 sponsors at this session, and 9 of them are people who sell coach training to coaches, and only 1 of them is selling coaching to the client. And I said it's a great example of the life stage of an industry in itself. In the early days, in other words, there's lots of people, supplying the shovel so that everyone else can go and dig for gold. But there wasn't a lot of people digging for the gold. There was lots of people selling shovels. And over time, what I said was, for an industry to mature, it needs a lot of capital to come into it. And whilst we don't have a lot of people out there, doing the coaching in front of the clients, but most of the money's being made by the coach training companies, we're not going to get enough capital into the industry. And, of course, that's starting to shift a bit. We're starting to see the associations talking to each other a bit more now. We're starting to see people starting to form more conglomerates now and being less isolated and less franchised, less fragmented, and that's all healthy for the industry. We need more of that to come together. But it's still got a fair way to go. The industry in its own right is still young.
So I'm hearing a couple of things, and we need to explore both of them. The one of them is that we need to understand what's happening in the global economy and how that's going to impact us in the industry in 2012. And the other thing I'm hearing is that the industry itself is maturing, and we can expect more and more players in the industry coming together, working together, conglomerating, and getting things done together. So I guess let's tackle the first one. Business coaches, whether they're individual business coaches operating out of their home office or whatever, all the way up to the larger business coaching firms with a dozen coaches working out of an office or something like that. How should they be understanding the economy and planning for 2012? How should they be coaching their clients?
Well, I'm not sure what to do there other than send them off to read the articles, but because we're quite open about having a good read there. But we're right at the end of the flat phase. If you look economically, you've got all of the major indicators around the world are already in double dip.
Yeah.
So US housing has already gone back into a double dip. UK consumer spending's already in a double dip. As we know, most of Southern Europe is already in a double dip. Japan's already in a double dip, etc., etc. So, and whilst people say China is flying, when I'm in Shanghai talking to people out there, and they say, we used to be achieving 300% growth, and now we're only got 100% growth. That's a double dip to them.
Right.
They don't feel good about only doing 100% growth when they used to get 300.
Yeah.
So the world is. I said to someone the other day, we're closer to the end of the recession now than we are the start. That's just a nice way of summarising. This thing started in July '07. We're entering 2012. And people are sort of fixated on now when will this finish? And I keep trying to say to people, don't worry about whether it's 2012 or 2013 or even 2016. The point is we're closer to the end now than we are the start. And those that have invested in their businesses will be the ones that reap the return in the boom in the next recovery cycle.
Yeah.
And it takes. I've been saying to all of the clients, it takes most businesses about a 12 to 18 month investment cycle. To even if you just think about doing simple things like employing more people, those people generally take 9 to 12 months before they become properly effective.
Yeah.
And so if we go into a recovery cycle in 2013, 2014, it's the investments that you make in 2012 that will reap the recovery, reap the return in the recovery. And if the next recovery cycle, by the way, is on average, let's say 7 years, then we're looking, before we go into the next dip, well then we're looking at sort of 2019, 2020 as the next peak.
Mm-hmm.
And then what I've been saying to a lot of people is if you work out how old you are on that day in 2020, there's a whole bunch of people who are saying, well, that's getting close to my retirement years in business, and they'll be looking for, the next, call it semi-retirement thing to go and do.
Mm-hmm.
And by the way, there'll be more baby boomers trying to sell businesses in 2020 than there'll be ex-gens trying to buy them.
Mm-hmm.
And those baby boomers will be looking for their next career.
Mm-hmm.
And coaching, by the way, is one of those industries that a lot of those people will turn to.
Yeah.
There'll be an influx of people coming into this industry, yeah, in the late 2010s.
Yeah.
And those industry coaching companies that are geared up for that will be the ones that get all the growth.
Yeah, very well said. So if I have to try to boil this down, you're right. Actually, before I boil it down, if I just reflect on what you've said, we invested heavily, and I know a lot of the business coaches around the world that affiliated with our company, and a lot of their clients invested heavily over the last couple of years. And then this past year, 2011, has been a pretty good year, but as you say, it's been a flat year. So what you're really saying is be prepared, potentially, in 2012 for another hard year with a double dip, and bear down and invest again, because 2013, 2014, you should begin to reap the fruit of that investment.
Yeah, and the double dip, I've been trying to highlight to people, has already happened.
Yeah.
People have been looking for it on the stock market, and I go, often you won't find it there. You've got to look at the raw data, and the stock market came off in a high of April, down to a low in September, and most of the markets around the world, it came off 20-25%. And at the same time that was happening, all the raw data around the world was already in double dip. You normally then add another 6 to 12 months to find, the economic fallout of those changes. And a lot of the governments around the world today are in election mode. They're starting to work out, when's my re-election due. The UK and US, for example, are heavily into thinking about that sort of stuff. And so they're getting things timed quite nicely. UK government, by example, threw over 200 billion into the economy a couple of months ago, and surprise, surprise, but the GDP figures for that quarter showed up as 0.1% positive. And kind of, if they hadn't have thrown that couple of hundred billion in, you kind of go, would we have gone into negative? And if so, and this quarter shows up negative, then all of a sudden you're officially into a double dip. But they're doing what they can at the moment to avoid the official double dip. So that's why you've got to look at the raw data. And if that raw data is there to be sort of looked up and on Google it, etc., and then you add 12 months, well, it's about September 12. So you're right, 2012 won't be a pretty year, but by September 2012, a lot of companies will be reinvesting again.
Let's just take the typical business coach that's hearing this call. What do they need to do to educate themselves, to get some skills in place, and be ready to take advantage of what's coming in 2012?
Well, the biggest when I chat to coaches globally, well, the biggest thing I try to refer them back to is their own histories. So mine is all the financial stuff, so I find that part easy. And what I've got to do is go and keep getting myself trained and skilled in the opposite of that skill. A lot of others that I meet in the industry haven't come from a financial background, and so they're quite comfortable in the human skills, but when it comes to running the business and running the finances and all that sort of stuff, that's not their backgrounds. And so what I generally find, I chatted to a lady literally this morning, and and she said, I'm interested in joining your business and stuff. And I said, well, what's your background? And she told me, and it was all the human skill stuff. And I said, could you tell me what training you've had for the last 12 months? And it was more human skill stuff. And so I said, look, what you're doing is falling into the trap of doing education that you enjoy rather than doing education that you need.
Mm-hmm. Yeah.
And the response was, wow, Darren, that's the best thing anyone said to me in 10 years, sort of stuff. But it was simple, but it was just, here it is. You need to get the width of skills across you and the width of skills across your business to really take advantage of it. And the effectiveness stuff for people is really around that business model. I'm again, this lady, I said, can you split up how much of your month are you spending looking for clients? And she said, well, about half. And I said, well, that's lost productivity. Like you can't bill out for that. So I'm finding generally in the industry, and it's not true for everyone. There'll be some people listening to this call who will say that's not me, and that's fantastic. But if we go into the industry generally, what we have to encourage is for people to change the business model. And if they're spending a lot of their time finding clients and designing stuff, well, that's not billing out in front of the client. And so unless you've got a model for attracting clients to you, and unless you've got some intellectual property and methodology that stops you from designing stuff over and over again, then your effectiveness, is really low. And then you've switched that then to the revenue models. And so I generally, when I meet a lot of coaches, I ask them what their revenue model is, and it's still surprising how many are actually charging session rates, day rates, hourly rates, etc. And you just can't make enough money doing that. There's no money in that, in my view. You can't charge out enough hours to warrant running this as a business. It becomes a bit of part-time hobby stuff.
Yeah. So we're heading into a year where we could have, if I'm surmising based on what you're saying, we're heading into a year where we could have a slightly milder version of what many of us noticed in 2009. So would you agree? Would you say that that's what you're seeing, or was that oversimplifying?
No, that's fine. It'll be dependent on what happens in Europe around, if they I'm just trying to get the language right, but if they, cover up the euro issues and all that sort of stuff, and I don't mean cover up as in cover up, but if they, if they get through all of that stuff, then the top line numbers will be okay. The raw numbers still show we're in a slump, and so it'll look exactly the same as 2009. If they aren't able to come to arrangements and that sort of stuff in Europe, which is where the pinch is around the world, then you'll find it'll be on front page rather than the back page, and it'll be headline. It'll be, Italy will go into a mess, etc., and then it'll seem a lot tighter, but the truth of it is it won't be that much more difficult. So I just keep saying, while the world's hurting, now's the time to get your business ahead. While the world's sort of navel gazing and stuff, now's the time to get proactive and get on the front foot and get out there and start talking to a lot more people and convincing them that the product we've got in the coaching industry is a great product, and they need to look at it. Even if they're not ready to buy it today, get them on your database and go and sell them something in 12 months from now. Yeah,
such a good point. I mean, so many of the coaches that are part of our association were investing heavily in 2009, pretty dramatically up their client acquisition models. We've had a big push here over the last couple of years teaching coaches how to get online, harness the power of internet marketing, social media, and all the rest. But those who were investing heavily in upgrading their methods for getting clients back in 2009, as early as 2009 and even 2010, have had great years. And this past year has been great. Some of them are making more money this year than they were making even prior to the crash in 2008. But what I'm hearing you say is more of the same. Invest heavily this coming year while the weaker players are being weeded out, and you'll be ready to go in 2013 and 2014.
Yeah, well, the thing I told people in 2008-9 to do in our client base is I said to them that the the uplift in March '09 was only ever going to last 6 months. So invest. What I told them to do is invest heavily in product and infrastructure, but don't invest too heavily in sales and marketing. Broaden the network through campaigns was what I told people to do, and so social media would have fitted that perfectly. This time round, what we can do is invest because we know we're going to come out of this and go into recovery. Whereas back in '09, we didn't know that there was a recovery around the corner. In fact, what we knew was that there was going to be a big flat phase. This time round, even if the markets look flat for the next couple of years, the point is where the raw data will show that we're back in recovery mode. And so companies, I've just been saying to people, look, the rule of thumb at the moment is just ask companies whether they're spending at the moment or whether they're holding their cash. Yes. And the answer is they're holding their cash. My biggest client's got $9 billion of cash in the bank. And a lot of small businesses that I know, they've all got 50 grand, 100 grand, 300 grand of cash lying around, and they're all calling it at the moment for a rainy day. And so those businesses will all release that cash once their confidence kicks in. And they'll therefore start spending money on training and coaching, etc., all over again. When that happens, we as an industry need to be on that front door, ready to service those clients. So the investment in this part of the cycle should be in product. And this time round, we can confidently invest in marketing. To build those databases.
Yeah, that's really good and really helpful, and I think very practical. And we have, by the way, read some of your articles and watched your videos and things. And we just think you're one of the best studied and soundest thinkers in our industry right now because of your background, all those things. So thanks for what you're doing and saying these days. And you mentioned a little bit as well about the business coaching industry going through its own life cycle. Describe that, a little bit more about that. We just talked about the economy, but describe the phases of the life cycles you understand. I know there's a lot of mental models about life cycles for business and industries, but just say a little bit more about how you view the life cycles in an industry, and then where do you think we are as an industry, and how does that play into this?
Well, this of course is just playing into my old background because all I ever used to do was study industries and work out where they were up to. And my old days was, if you can go and find a brand new industry and you invested in it early enough, then I describe it as finding Microsoft and buying it for $1 and selling it for bloody thousands later on. When I tripped into the coaching industry, I went, this is a whole new industry, and it was an industry that. It's a classic industry shift model, and so if you look, I'll give you some examples. If you look to, let's say, the financial services industry, in the 1950s, 60s, 70s, it was all based around insurance, and that was the only product you could buy. There was no such thing as wealth management and investing in unit trusts and all that sort of stuff. In the 50s and 60s, there was whole of life or endowment, and then along the 70s came and you could buy term insurance. And towards the end of the 70s, suddenly they started to unbundle contracts, and then all of a sudden you could just, you could buy investment-only contracts, which by the 80s turned into, trusts and all that sort of stuff. And when that came about, 1979, the wealth management industry was spawned. Because somebody went out and said, I'm not going to call myself a life insurance agent anymore. I'm going to call myself a financial advisor. And so what they do in that scenario is you position yourself against the old industry by saying, well, that old product is no good anymore. You should come and buy mine. And of course, a lot of clients went, you're right, I'm going to go and buy wealth management. All the people sort of poured into, then from a career perspective, wanting to be a wealth manager, not a life insurance agent, and it largely killed off the life insurance sector. Now, you go forward about 10, 15 years, and eventually when everyone's now in the new bucket called wealth management, the way you position yourself against that is you take this holistic view of investing. And of course, a holistic view of investing would be that you would consider both the insurance needs and the investment needs of somebody.
Mm-hmm.
And so you end up in the middle.
Yeah.
And a lot of industries that shift go through that industry shift cycle. And when I show this people on stage, I use some great examples with imagery. So I show them, for example, a picture of a camera, some 30 years ago, and it's this big thing with lenses on it and all that sort of stuff. And you just have to take it down to the shop and get all your stuff printed. And then I say, now what's this? And I show them a picture of the first digital camera.
Mm.
And of course you could put it in your pocket. It was those slimline ones that you take to the parties, and you could just, click away.
Mm.
And I say, and what do we use today?
Mm.
And of course the answer is we use this big thing with lenses on it again, but it's now digital.
Yeah, yeah.
And I go, so now we're back in the middle.
Yeah.
And what I've always said about coaching, and I've been, I've been criticised for this in the coaching industry, by the way.
Mm.
But what I've always said about coaching is that coaching was spawned out of consulting,
Mm-hmm.
from an industry perspective.
Yeah.
And of course, the pure sense of coaching, the pure definition of coaching is that the client knows the answer and we don't need to know their business, etc., etc. And so it becomes the reverse opposite of what consulting is.
Yeah.
Right? And so in the same way as you could stand there with a digital camera and say you don't need one of those old big things, or a wealth manager would say poo-poo, don't go and buy insurance.
Mm.
The coach these days is able to say, don't go and get consulting. This is the completely different version of something.
Yeah.
And since 1994 I've been saying one day this will end up in the middle.
Mm.
And it will be a blend of consulting and coaching.
Mm.
Which is actually what the Shirlaws offering is.
Yes.
And it's a point of industry maturity when the industry ends up in the middle.
Mm-hmm.
How do you get there? Well, you go through a couple of basic stages, and so there's a startup phase for every industry.
Yeah.
And in the startup phase, it's a bit of a land grab, as I describe it. So it's what's typified by an industry startup is, or the way I look at it, is I go into a new industry and I look for how many associations there are. And in the early days of an industry, what you'll find is there's somewhere between 5 and 8 associations.
Mm-hmm.
And they're all sort of land grabbing and trying to get as many people into their association as they can, etc., etc. Mm-hmm. And then once you get past startup, you go into a growth phase. And what normally is indicated by a growth phase is the associations start talking to each other. Some of them start to merge. And of course later on, when you're at maturity of an industry cycle, you end up with only two associations, or in some cases only one association. Mm-hmm. And so now none of the associations in the coaching industry today would want to hear that.
Yeah.
But if you go and research every other industry you can find, none of them are running 8 associations. They're all running, they're all running merged associations and stuff. Right. So we're still in the early stages. If you look at very old industries, airlines, banks, oil sectors, etc., they all have 4 large brands. Each of those brands owns circa 20% of the industry market share. Mm-hmm. And then you've got thousands of other companies that own the last 20%. Mm-hmm. In the early days of an industry, it's typified by the fact that no one owns any more than 1%. Mm. So if you do all of the industry research on this coaching industry and multiply, the perceived, if you take a PwC report on through the ICF, for example, 2007, and go, what did they think the revenue base of this industry was, and then you multiply that out by 1% and see how many coaching companies are achieving more than 1%. The answer is hardly anybody.
Yeah.
And so we're nowhere close to having 4 brands running 20% yet.
Yeah.
Of the whole industry. So to go from startup phase to maturity phase, there's this massive consolidation that occurs. Mm-hmm. And consolidation occurs when again, just looking for the right words to use, but consolidation occurs when people finally drop their own agendas and start realizing that to advance the industry, and you have to get economies of scale. To turn up to large corporates and to expect to be able to charge what PwC, Boston, McKinsey's, Accenture, KPMG and all those guys charge. No one in our industry yet looks big enough to do that. So, but you consolidate a few together. If we could get 5 or 6 decent-sized coaching firms around the world consolidate and merge together, we could charge as much as those guys do. And then all of a sudden you've got capital coming into the industry, and then the industry would grow very quickly. So we're still in that first phase. We're still in that startup phase, which is normal for a service industry, by the way. Service industries take a lot longer to go through their life stages.
Really, really very rich, and it's amazing to think that as long as you've been in the business and I've been in the business, the last 10 years, we've still only made it into the startup phase. We're barely into the growth phase. I mean, just this year, I actually just yesterday I was interviewing Ben Croft, who put together, as you know, the World Business and Executive Coach Summit, the first ever event of its kind, where he actually had all the associations talking and participating together. I mean, that might be an early inkling of the second phase, which you mentioned, which is the growth phase, where the associations talk and merge. But amazing that we're a decade into it and we're still only in the first phase.
Well, and it's the thing I've been crying out for is, please get the associations talking, and please get this economies of scale going, and and some recognition. The more mature industries recognise the corporates. And what we have through the associations at the moment is it's a little bit like the frequent flyer programs with the airlines, where they only recognise the individual but not the corporate. Whereas if you look at much more mature industries, of course they recognise the corporate, because it's the corporate that provides all the capital and the sponsorship. So we've got a fair way to go yet.
Absolutely. What's the one thing you would tell business coaches to do this coming year in light of this?
Well, I mean, I think I said it. The people who get their revenue models right. When we had a coach join our business last year who was earning more than $400,000 US on their own, and they joined us because they wanted to leverage. And it was a really good indication to us that, if you've got the right business models, that people can scale themselves. And when people sort of look internally at our revenue models, less than 5% of all of the money that we generate in fees comes from selling, time or session rates, day rates, whatever you want to call it, and 95% comes from other sources. And it's we charge project fees. We're able to license out our IP. We sell product, and so on and so on. And it's those coaches who are able to scale their revenues that have spare capital. If you're only charging day rates, you've got enough to pay yourself, but you haven't got enough capital to scale the business. And so I'm sort of just keep pushing everyone to, for the whole industry, in other words, to go up a notch in maturity. And if we can get people with more capital in their businesses, then of course they're able to scale those businesses, which makes the whole industry more mature, which means we can all go and knock on the doors and charge more, and so on and so on. It's the answer lies in the revenue models. That's where we are. Yeah, moving away from selling time and moving toward selling product, and that totally makes sense. And it's I know there's a number of us that are beating that drum. So great. It's a good reminder. Listen, if people want to learn more about Shirlaw's coaching and all that, where do they find you, man? Just go on to shirlawsonline.com. There's information on there. Our website for clients is shirlawscoaching.com, but the shirlawsonline.com is the one we send our existing clients to. It's got the articles on there. There's coach profiles on there, so people can find me and just click on that and send me whatever their questions or whatever they want to ask.
Yeah, that's great. And your website, Shirlaws.com, that was one of the first things that stood out. It was, again, sophisticated, and it was very clear that it was for the middle market, middle market to mid-cap kinds of businesses, as compared to some of the garish, kind of amateurish looking websites that some of the other organizations have. And so, yeah, really would commend your whole model to folks on our call today.
Oh, I appreciate that. Thank you.
Yeah. Well, Darren, thank you for giving freely of yourself, sharing this really valuable information. I know you really let me pick your brain and draw some really good stuff out of you, and I appreciate that. And I really would encourage all the coaches on the call to go check out these websites, shirlawsonline.com, shirlaws.com. Have a look at what Darren's doing and read his stuff. And if it's a good fit, reach out to these guys and see if it makes sense to work together.
Yeah, it's Shirlaws. It's shirlawscoaching.com is the second one. Yeah, sorry.
Good. No worries. Shirlawscoaching.com and then
shirlawsonline.com.
Yeah, perfect. Yeah. Well, thanks again, my friend. Appreciate the time today, and thank you everyone for being on the call. And we'll look forward to catching you on the next call. In the meanwhile, have a great holiday season here at the end of 2011, and make it a great 2012. Bye for now.